Matt Orton, Chief Market Strategist at Raymond James Investment, is now joining in. Matt, thank you very much for joining in. As we said, there's still no decision from the U.S. Supreme Court on tariffs. Does the lack of a ruling on tariff make it difficult for markets to have a clear direction, at least in India? Because amongst all, we seem to be more sensitive to what happens on the tariff front.
Hi, good morning, Raymond. And I think the lack of certainty with respect to tariffs certainly impacts sentiment with respect to India. And I would say from a foreign investor sentiment perspective, it's particularly acute because you have other emerging markets like South Korea, Taiwan, China, where there's more visibility with respect to what's happening, and just more clouds that continue to come over India with respect to Iran, and still not having a result from the Supreme Court or a resolution to a trade deal in the first place. That being said, what I urge investors to look at, and this is with respect to India and really the rest of the world, is to avoid reacting too much to the headlines that are out there and really follow the fundamentals. We've been in a macro-driven market for the past couple of months, really since the last earnings season, and now we're finally getting corporate results around the world. And results so far have been pretty good. In the U.S., financials have been very, very strong. It's encouraging. Again, the share prices rallied into the earnings, which maybe led to a little bit of a letdown. But overall, investors should lean into names that have been a little bit weaker, but report really good numbers that are levered to strong fundamental growth drivers in the economy. And I think that sets you up well in 2026.
Matt, hi, morning. In terms of your conviction bets, what would those be? Anything new, Matt, in that sense? Because prices have fallen, and as prices fall, I mean, I guess more and more stuff comes into the investable zone. So tell us.
Yeah, no, it's a very good point, Prashant. So I like when names fall heading into earnings where there isn't really fundamentals driving it. The reaction to HDFC, I think, is overstated. I'll be very curious. I'll be watching to see what the results are for both HDFC and ICICI. I would expect to see decent results. The key is going to be, margin enhancement, what the directionality is with respect to ROE, how we're mobilizing loans. If we get decent results and growth there, I think you could see a pop with respect to share price. But IT has been an area I've been keeping my eye on. We started this year talking about some of the green shoots in IT within India. Infosys has been interesting. You look at the strength, particularly around global asset management and financial services, having willingness to sign bigger contracts. So you're getting better visibility with respect to large deal flow. If you can see names like Tech Mahindra, who also has decent exposure to IT around the world, report good numbers, I think that could be really, really interesting. And those could be more long-term turnaround stories where valuations look very attractive right now.
So Tech Mahindra over Infosys at the juncture, and Infosys ADR did very well. Are investors also sharing the optimism surrounding Indian IT? I mean, do we see a turnaround in stock prices from here on?
I think you can, assuming the rest of the results come in good. This group has been trading a little bit less correlated over the past year, which is encouraging. Again, it signals to me that fundamentals do matter. Obviously, Infosys is the giant in the room, but I think a name like Tech Mahindra, I like just the diversity of exposure and the significant room for margin expansion that the company has related to being able to sign bigger deals. I think Infosys is a name that is cheaper. It's underperformed. So from that perspective, I think it's interesting for maybe a value investor who might want to buy something more to discount. But I think the premium asset that has the best chance for strong margin growth in 2026 into 2027 is going to be Tech Mahindra.
Okay, all right. Matt, a quick word on the geopolitical issues, because they have suddenly cropped up. And it appears, most equity markets are just looking through that. Do you think investors are being a little too casual about it? And that can actually suddenly perk up and, hurt sentiment big time?
It could. When you just take the whole geopolitical world right now, Nigel, there's increasing fracturing that's happening. And there's a lot of hotspots around the world. And so I don't think the market's necessarily whistling past the graveyard. It's just, I think the market's a little bit jaded to the news flow that continues to barrage investors on a daily basis with no resolution and nothing really happening on both the left or the right tail. And so what I encourage investors to do with this, and I've been very long across my portfolios really for the past year, has been playing offense and defense with defense companies. So I'm looking at companies that specialize in drones, autonomous warfare, the next phase of where governments are making investments and spending more money. You saw a Truth Social post from President Trump here talking about increasing the defense budget from $1 trillion to $1.5 trillion. You're seeing money being spent by European governments, more money being spent by governments in Asia around defense. And I think that is a very long-term, durable trend that's already impacting earnings. So if you want to hedge those sorts of risks, I would say look for premium assets across the defense complex. And I think that's a great complement to portfolios right now.
Any defense stocks in India?
India is a little bit tougher for defense stocks. So Hindustan Aeronautics was a name that I used to trade in. Right now, I just don't have as much visibility with respect to helicopter purchases, where exactly they're planning to have growth with selling outside of India as well to other Asian nations as you compete against China. So right now, my preferred areas to play defense rest both in the U.S., not on the contractor side, but on the more missile, rockets, and technology side, as well as some European defense companies as well. I think those are the assets that have the most potential to report strong earnings in the near term.
All right, Matt, thank you very much for joining in.